China's economy slowing more than expected, more than people think. This is a guy named Leland Miller. He's executive officer of the China Beige Book, which keeps track of China's economy. All right. And I need you guys to see some of this stuff occasionally. And I need to drag you into my personal hell as I watch the economic forums and I watch the stuff to make sure to check myself. Because I'm not an economist or didn't ever start off to be one. And yet, there's some predictions and some calls I've made based on my on-the-ground experience. And anecdotal is anecdotal, and you got to recognize, oh my gosh. Thank you, Vincent. Oh my God. I appreciate that. Inflate this. Hello. Thank you so much. That's beautiful. Yes, apparently it's, and we got a level 2 hype train at the exact same time happening on Twitch, twitch.tv/AlSparks. Don't forget to subscribe, especially if you're one of Hassan Piker's kicked to the sides and you have no place to go. Welcome. I'm going to say some things that are going to upset you, but I mean well, and I'm trying to help. So in the process of this, I've been saying stuff for a while that where everybody's like, oh my God, China's going to take over everything. Oh my God, they're going to eat our lunch. They're going to do all these things and there's nothing we can do. And we're absolutely screwed and there's no way around it. And everybody says it's fine and they're kicking our ass or we're going to be blah, blah, blah. And they're going to overtake us in 2024. No, they are not. And it's worse even than people are mentioning. Let's dive into a little of this if we can. Here we go. Hold on.
China, because of course we continue to see these conflicting messages coming from Beijing. Perhaps the China October activity data looked a little bit better. What do you think?
By the way, the conflicting stuff she's talking about is whether or not they're going to bail out Evergrande, which is a giant real estate holding company, which in China, the largest in the country. It has $300 billion in outstanding debt that it cannot pay off. It just defaulted a month ago. It defaulted and got a 30-day grace period. It just defaulted on the grace period. And the way that the people it was supposed to pay on that debt found out was they stopped answering the phone. They pulled like, you know what you did in your early 20s when you would just ghost your debtors? That's what they did.
Health reality in China,
Yay.
The economic
Susan.
reality in China right now.
I think that the third quarter was particularly brutal, but the reason to invest or not invest in companies like Alibaba isn't a third quarter story. It's whether you're looking at the trajectory of the Chinese economy and whether a particular company like Alibaba can defy the fact that the economy is going to be slowing down quite dramatically. Retail sales haven't looked good for a while. They're probably not going to look good going forward, but Alibaba is a pretty impressive company. So the question is,
by the way, Alibaba is the Chinese Amazon, and a lot of the cheaper products you see on Amazon are effectively drop shipped through Amazon. People in the United States set up an account. They fill out like, hey, buy this water pitcher for $40. It costs $3. They arrange a trade essentially where Amazon fulfills the order for them by ordering that $3 pitcher. Or maybe 10 of them if they're really investing in something. Amazon hangs on to that for a while, fulfilled by Amazon. It sits in their warehouse for a certain amount of time, and then they will either junk it back or if it doesn't sell, or they'll move it on. And if you don't have that many of them, a lot of times you'll be able to sell them. But there've been a lot of people become millionaires in the last few years doing this particular trick where they buy stuff on Alibaba, sell it on Amazon as this bounce through. So Alibaba, I mean, you could buy everything you see on Amazon on Alibaba plus buildings and giant like military jets. It's fucking ridiculous. And most of it is crap. 85% of the stuff on there that isn't a DJI drone is garbage. But people have been doing this for a while. That's drying up because of the supply chain issues, and a lot of those factories are moving out. So you're seeing a lot of these items are now coming in from Indonesia, South Korea, the Czech Republic, everywhere that people can move to get slightly better, it'll be slightly more expensive as far as the wages there, but more reliable shipping and possibly higher quality items. Now that's baked into the cost of stuff. So some of the inflation you're going to see is we used to make it using slave labor in China. We're not willing to do that anymore. So we're moving it to someplace where it's really cheap because the country that it's being built in, when they go like, people here live on $5 a day, that's like you can buy $60 US worth of goods on that. And that's a lot. So we'll get to that in a second. Okay, here we go.
If you've got this long-term slowdown, a slowdown that for the most part is not yet baked in by most analysts, it's going to...
Right. Now, remember that. The slowdown in the Chinese economy is not... most economists talking about China's economy are saying it's kind of fucked right now. They're saying it's kind of fucked without mentioning or adding into their equation the general slowdown in the economy. They're blaming, power outages, COVID, and other stuff. But there's a huge consumer drop as well.
More precipitous than people think. Then can Alibaba defy the odds and still transcend, even though the economy is slowing more than people?
No.
And it will be so difficult right now, given, of course, the regulatory crackdown that Alibaba is facing. And I know that you and I will have this conversation later on. And
what she means by regulatory crackdown is that millionaires and billionaires bad, and some of them are going to re-education camps, and that they are dividing these companies up or taking them over by the state. It's fucking frightening. And again, are you a millionaire if you can't take your money out of the country? I would say no. I would say it's all puffery.
Panel about China and global capital markets, but how will this affect the long-term vision of where China goes from here, especially if you're really hampering these big tech giants? Mm-hmm. Is it going to have an impact on innovation and entrepreneurship?
Well, if they destroy the tech giants, it's gonna hurt innovation. If
you think?
How they thread the needle and sort of open up the ecosystems like they're doing with Alibaba and Tencent, making them interoperable. There are some positives that can come out of this, but I think that the most important thing is that this hasn't ended. I think a lot of people think this may have been a 2021 story, or it may have been, a drop in the pan, and then President Xi has moved on. This is all in the run-up to the Party Congress next fall. So the idea that Alibaba got punished, here's the new reality, and things aren't going to get worse going forward, I think that's a very bold statement to make.
What he means by bold statement is that's bullshit, just so you know.
Given that we're seeing the property curbs as well continue, right?
Right. Well, I think what we're seeing right now is not.
And property curbs is they don't. There's this new push from Xi Jinping that real estate is for living in, not for investing in. And right now, the only thing you can invest in China is real estate. So that's where everybody puts their money. And now they're just kind of turning it to zero. Imagine if tomorrow, and remember this, by the way, when they call Biden a tyrant, or tell you that the U.S. government and the Fed have total control over your economics and they can just destroy you in a second, which is what Glenn Beck says all the time with the Great Reset bullshit. China's actually doing a Great Reset right now. And the rest of the countries in the world that actually do have functioning economies like ours are going, fuck that.
Normal Chinese downturn. We're seeing a paradigm shift that we haven't seen in 10, 20 years. I think this is some of the most interesting time to be looking at the data. So if you look at China Beige Book data, you're
very interesting. 很有意思.
Seeing enormous de-risking going on in the financial sector, enormous de-risking going on in the property sector, which has now become evident to everyone because of the Evergrande crisis.
By the way, de-risking. Dude, there's 90 million empty, unfinished condos. They're not apartments. They're condos built in China. Nobody in them. Built with, they call them tofu drag or tofu dung, depending on how you look at it, apartments. They're falling apart right now. People have poured their nest eggs in them, and they're just looking for the next big sucker. Basically, you have 90 million meme stock apartments.
This is not something where they're going to register a little bit of a downturn and then zip things back up with stimulus. I think the growth playbook has changed, and because the growth playbook has changed, we're going to be looking at much lower growth going forward, and it's going to be
the growth playbook. What he means is they are literally snipping the hamstring of anybody who decides they want to do more than walk.
Because the party is okay with that.
Exactly. I was going to ask, how comfortable is Beijing with this? Because, of course, we know they could do so much more in the stimulus side of things.
Well, this is what's frustrated Wall Street for the last 2 years. They saw COVID recovery. It was uneven. They said, okay, we're going to see a retail bounce back. It didn't happen. It was never going to happen in our data. But when it didn't happen, everyone was saying, oh, there'll just be stimulus. We're expecting a big stimulus because that's what they always do. There was no big stimulus. There's no broad policy easing.
You know why? Because with what?
The reason for that is the leadership has decided right now that there's only so much more road that they can push. And it's much more advantageous for them to get ahead of this, to slow things down, to work towards slower, healthier growth of the Chinese economy.
And I love this. U.S.-China flashpoints, Taiwan and human rights, like they're separated. And then semiconductors, trade, and big tech. First of all, they're flushing all this down the toilet. All the companies that aren't building like military level tech are just being like blown up, including Alibaba. I mean, it's just basically, the online sales is really just like a society tracking device. And Biden getting out ahead of the cart saying we will defend Taiwan has everything to do with semiconductors and the fact that the Taiwan Semiconductor Company is building a factory in Arizona as Intel has expanded their 3 factories to 5. We are going to be a majority chip manufacturer. Biden's going to do in the next 3 years for chip manufacturing what Trump alleges that he did with energy independence. We are going to be in North America chip independent going into the next 2 decades.
Rather than try to deal with the consequences of just keep pushing this model to its limits.
Basically being a bit more serious about the deleveraging efforts that they've carried out for a number of years now, right? But what happens then to these, say, local governments? Because we know that there's so much hidden debt there.
Okay, and that's the other part. So as a way of hiding how much debt, the $300 billion that's on the books about Evergrande, provinces, like think of it as big cities and governments, in the United States, they have to take out bonds. And a lot of those you have to either the city council or the actual voters have to vote on bond initiatives. These are all done under the table. And for Beijing to think that they're meeting quotas as far as money they're taking in, they will lease land back to themselves, effectively being their own Fed. So all the shit people say about, the Fed is printing money through quantitative easing, which is horseshit and another story for another time. AliExpress is just the smaller, more consumer-friendly version of Alibaba. It's the same company. Imagine if every state in the United States had its own Fed to just print money, quote unquote, to quantitatively ease themselves stuff while telling none of the other states. Think about how fucked up that would be. All right.
Well, this is a problem because when property is falling as a growth driver, what is the replacement growth driver? Under their breath, people say, oh, domestic consumption will somehow rise to keep it. That structurally, nothing is being done to empower consumption. Investment's falling, but consumption's not being empowered right now. You're not seeing
and you're not paying attention to the retail sales numbers that we keep
Well, you look at the retail.
So
So retail has been weak. It continues to be weak. But structurally, what is the government doing to empower consumers right now that it wasn't before? It's not increasing their purchasing power by ramping up the value of the yuan. It's not transferring.
Wait, the yuan is at a 6-year high.
But it's within a little comfortable stability level, which they like. They're not transferring state assets to household sector. So nothing big is being done. And the question is that if you don't have...
Yeah, so the one area they have is they could devalue their currency, which is what their trade partners are all pissed about. So you could piss off all your trade partners. Well, guess what? Here's a pop quiz, kids. And this has got a... What do you think in the import-export? Does China take in more stuff than it sends out? In general. What do you think? It probably feels like a trick question. What do you think? You think China buys more stuff from other countries than it sends out? No, it does not. No, they don't export more. They assemble things there. The manufacturing hub of China is a slapping shit together. They get more stuff from outside the country and it goes into the country. They assemble things, get paid to assemble stuff. But all the stuff that you see that says made in China, a good portion of it, especially the higher level electronics, the chips and other stuff are made in other places. And then they are shipped to China where they're added to some of the stuff that they have, the plastic cases, the boxing and all that kind of stuff. They assemble it in these factories at Foxconn, for example, and then they send it out. And they also, on top of that, yes, they take in raw materials, lots of commodities. And the more commodities they take in, the more their external debt gets as well, because they can't do all that assembly they're doing for everybody else without that cheap labor and that extra stuff. So, I mean, it's a deeper conversation, but in the broad strokes, super important for people to know. And I just don't think anybody pays attention to this shit.
Sort of rise in order to pick up the slack. Where are you going to get the growth from? I think the idea right now is, look, you've got all these companies out there, they're making a lot of money. Maybe through the back door you start doing dividends in order to fund the social agenda, and that's where it gets dicey when you're trying to look at investing in some of these companies.
We see all of these international companies, especially banks, right? The big Wall Street banks rushing into China. What's the risk there?
Well, look, for them, this is a beautiful scenario. They're being invited in. There's enormous opportunity. It's one of the few sectors where Beijing is saying, come in, make some money, let's do it. And by the way, go back to D.C. and tell. By the way,
and China needs U.S. currency to pay its bond payments throughout the companies, because all these companies that owe money, interest payments in U.S. dollars are 50% plus owned by the government. So the government needs U.S. cash coming in at all times. That's why they want them in the banking sector.
Not to be mean to China. So, look, I don't blame any of my friends here. There are many of them here at the conference who are saying the same thing. They're like, look, let's invest in China. It's a beautiful time to be doing it. I think if you are the financial sector, there are opportunities. If you're outside the financial sector, the opportunities are very limited.
Yes, if you're not a cash shuffler that makes their money with bullshit day trading and swinging, where you can bail out quickly, then yeah, don't.
Financial opportunities there when we continue to see this sort of decoupling, more regulatory measures coming, not only from the U.S. pressuring China, but also within China.
Sure, the pressures are everywhere. So in China, the Chinese model, if we look back, is that they want capital flows, but they also want expertise. And when they get the expertise and they figure it out themselves, then these firms are going to be pushed aside. So, if you go in, you have to go in with very open eyes. This is a very difficult market to operate in. The government would prefer domestic firms in any chance it has to put its hand on towards domestic firms. So you have to really watch it. The short-term gains are not worth doing long-term stupid things.
There you go. This is so crucial, because so many. This is actually, at their economic forum, this is not something that's not being spoken of in all these corners. And when you hear Mitch McConnell and all these people about how clamoring that Biden's sucking up to China and blah blah, everybody is fucking bailing out of China right now, because they're using slave labor for cotton specifically, and they're forcing thousands of Uyghurs to go down and work in factories in Shenzhen and the like. They're replacing some of their, missing and dead workers from COVID this way. It's fucking horrifying. And yes, and the US dollar is stable and solid as a rock, and will be for a very long time. And the quantitative easing that's happening, that they've done over the last little bit, and the idea that we're supposedly printing money because of the debt we take on long term, especially when it comes to infrastructure, which is an obvious return investment. May I remind you that the 2009 bailout that Obama, and Biden oversaw made money. It got all of the money that was lent out by the taxpayer back, and it earned interest. So this is one of those things, just having some of this detail in your head when you're seeing some of the other stuff that's being thrown around, as far as just your kind of blue jean bullshit coming from Glenn Beck. Yeah. I mean, and there's so much of this. Everybody is going, is running for the hills right now. And a lot of it has to do with consumer sentiment in the United States, that the American consumer is willing to pay more if you're not paying for slave labor. And don't talk to me about fucking forced labor. It's slavery. If you are forced to work and you cannot leave and your life is on the line, that's slavery. And the fact that it's fucking cotton, I don't know why the hell that isn't like just part of the regular news cycle here all the time. Like, you don't get it? You know, literally, they're fucking, it's slavery, and they're using it for cotton. And so the clothing that you get from there, unless there are specific limitations, will contain slave-grown and collected cotton. No, we fought a war in this country against that kind of shit. And we're not the only other country that's getting out. I'm just saying, like, and there is no out for this. This is coming. I said, 6 years ago that I was like, the Chinese economy has 6 to 10 years. I think COVID sucked 3 years out of that collapse. I think it shortened that time. And I think a lot of people are seeing that as well. So part of this is just a flex on me saying I told you so again, but also I just want you guys to be informed on sort of what's going on economically in the rest of the world, and that some of the inflation bottlenecks, what you hear about supply chains, part of the supply chain thing was a backup because of stuff that was waiting to be made, shipped across the ocean and brought here, and was, we were going to have empty shelves because of that shit. Part of it is because factories are relocating. South Korea, Japan just pulled major firms out of China, and they're going to make their stuff at home now because of they don't trust the government, the Chinese government for one, but also because they found out that slave labor was being used. That's why it was so cheap. And they're like, we're not willing to pay for that. And the other thing is this is how it ties to inflation. Then I'll get on to the topic at hand. The price was always baked in. Prices are not higher now. They were artificially cheap. And what was added into that price was slavery in exchange for lower cost goods. You always pay for it. There is no free lunch. The idea that things cost what they cost should not be shocking to everyone's financial picture. It's gross. All these cheap goods we were getting for the last 20 years especially, they had a cost. It's exactly like gas. Gasoline in the United States does not cost $1.89 or $3.50 or $6 or $11 at that one station in California. It costs somewhere in the order of $15 to $20 a gallon, but we subsidize it with our tax dollars because of the money made on it, because people can drive where they need to drive and trucks can go where they need to go. That subsidy creates $20 worth of wealth on top of that in the economy. It's been worth it. But not because gas is cheap, but because we recognize we needed that gas to do all the stuff that we do for decades. And so we subsidize the cost of it to keep it artificially low so that people could get about starting businesses and shipping shit and making things and delivering them. And it kept that us subsidizing gasoline through tax breaks to oil companies, through subsidizing gas stations being put all over the fucking country, and through our highway system, instead of building a giant train system or some shit that if it breaks down, we're all fucked and nobody can get anywhere until they get that train off the tracks. We went for flexibility, which is smart, especially when you're developing. We took down the price of gas. We, as taxpayers, decided we wanted gas stations every 50 miles minimum. We did that, the taxpayer, through subsidies of a particular industry. Where how they talk about solar and wind, like, oh, they're picking winners and losers. What the fuck do you think we did with gas? We picked a winner. We chose petroleum over kerosene or whatever options we may have had. May I remind you, the first person ever to be hit by a car and killed was run over by an electric car. There were electric cars a long time ago. But we went with gas because of the range. And even then, we had range anxiety. Again, all the horror movies and all that kind of stuff. And we decided, as a country, that our tax dollars would go to building gas stations all across this fucking country through subsidies and support of cities. And it worked. And every $15 gallon of gas that we drove down to $1 or $2 or whatever paid us $20 in dividends. And since 2000 alone, the U.S. economy has doubled. More than doubled, from like $11 trillion in GDP in 2000. It is now at $24 trillion in GDP, with no reason to slow down. And China was going to overtake us, and that's what everybody was telling, that's what everybody was saying. And it's not happening. Oil corporations and advertising agencies brainwashed America. No. We participated in this. Us. There was no alternative. The only part that was brainwashed about it is that we forgot about the part we played in this. So there you go. Anyways, so I need you to factor this in when everybody's like, why are we building electric stations everywhere with the consumer? You should let the market decide. We didn't let the market decide with gas. We made that investment in ourselves. We can do it with electrical cars as well. It's not even brain surgery. So there you go.